Goldman Sachs on the hampered housing market further to fall. Guys, like we've been saying, the housing market is hitting the brakes and everybody's freaking out, especially Goldman Sachs right now. Look at what they're saying. The sustained reduction in affordability, waning pandemic tailwind, and recent decline in purchasing intention suggest that home sales are likely to fall further on net. So guys, this is the economists telling you. They're letting us know, hey, it's not looking good. Here we go. Our model suggests that home price growth will slow sharply in the next couple of quarters. Again, if you're looking to buy a house this second, you might want to wait because you might get to buy that same house in that same neighborhood for a lot less come, in a few months from now. So that's what a lot of buyers are basically weighing. Should I buy now or should I wait? And a lot of them are saying, I'm going to wait. But not only that, a lot of sellers are saying, I'm also going to wait because they're not ready to sell their house. They're not necessarily ready to jump into another mortgage at another, because again, everything is really expensive with the rates where they are right now. Why would someone want to sell their house right now to jump into another mortgage with a higher interest rate? So a lot of people that are pretty good with their house, they have equity and they just refinanced in the last, year. They're not in the mood to get rid of that cozy situation that they're in. They're gonna just weigh this out because again, they don't have to sell. They're not totally motivated. What could motivate people to sell their house is basically a huge turn in going into a recession where we see high unemployment, right? Where people are just getting laid off left and right. That could send, the markets haywire, and that could cause a lot of people to, have to sell their house because they're struggling, right? If that starts to happen, yeah, you will see these prices drop really, really fast. But right now, unfortunately, we have high employment and it's keeping those prices elevated. Again, we have low supply. Now, I say unfortunately, not like when I said, okay, unfortunately, we have high employment. Well, high employment is good. The problem is that we're in a bubble and everything is really, really expensive. So it's good like when you start just like penciling out the numbers, but at the end of the day, with inflation being where it's at, people are making less money, and that's the issue. Our money is worth less. And if there's any rift in the economy, if we have, if big companies start reporting lower earnings, that could trigger a massive sell-off in the stock market. And when companies like Blackstone, when their stock starts dipping, or companies like Zillow, when their stock starts dipping, that is when you have to worry because, they might say, they might need to unload a lot of their inventory because, these companies own single family homes. If their stock starts dipping and they need to generate cash, they might want to jump ship and start selling their homes. If they start selling their homes, guys, that's going to add a lot more inventory to the market and it will make the prices drop very, very fast. That's kind of what I think is going to happen. I think that the housing crash, like the real housing crash. I know we have a slowdown right now, but I'm talking about like the big drop. I think it's going to come from the catalyst. I think it's going to be the stock market. The stock market's going to drop and it's going to bring everything else down with it. So that's kind of how I'm seeing it. I want to kind of hear your thoughts. What do you think? Do you think, are you seeing more growth in the housing market? I mean, there's definitely a lot of economists that are saying that they don't expect a drop. But again, we have to look at other parts of the economy to see, what is going to happen. Like I said, if we have low GDP growth, if we have weak sales come this holiday season, we could see a stock market crash come January, February, which will definitely, create a scenario of, where there's going to be a sell-off in the Dow, in the stock market, and the sell-off could, when there's big sell-offs, guys, what the first thing companies do to bring the stock back up is they lay off like 5 to 10% of their staff, and that when you start seeing those layoffs, guys, you are going to start seeing those rising inventory levels, back to like normal. Right now, we're like at record low inventory in the housing market. So again, even if we did see layoffs and we did see people, listing their house, more people listing their house, again, we're still in record low inventory levels. So we would need to see so much more supply out there. And we're just gonna have to see how it all pans out. I mean, right now, I'm happy that there's a lot of people, that have equity in their houses. They're not, they're very well positioned. A lot of banks are saying that their mortgages are being paid and everything's good. We're going to have to see if that changes. We're in a very different situation than '08. Again, '08 was totally different. It was basically the crash came because of the housing market. I don't think that's going to be the way it comes out this time around. I think the crash is going to come from somewhere else, and it's going to impact the housing market. But again, we're going to have to see how, we're just going to have to monitor it day by day and look at the data. Like, let's look at the GDP data. Let's look at the inflation data that is coming out very, very soon. Let's start looking at what companies are reporting, as far as sales are concerned. And with, when we start getting all that information, also we need to look at the, markets outside of the United States, what's happening around the world. When we start factoring all those things in, we'll get a better picture of where the housing market is going. But again, when you look at it right now for face value, we're definitely in a bubble, and it's a little bit scary. Because whenever we're in a bubble, we're all thinking like, okay, when is it going to pop? When is it going to pop? Is it going to pop? Is it not going to pop? Is it going to keep getting bigger and bigger or whatever? And that's, ultimately that's the issue that, we're in that weird stage right now, right? We don't know what the hell is going to happen. So that's what somewhat makes it very interesting to learn about and read about. And, you start reading all these articles, you start getting a better picture, you start seeing what analysts are saying. A lot of them are saying a lot of the same stuff, but they are reporting with numbers, which really helps you, kind of like gauge it for yourself. You kind of take you take what they have to say and you mix it in with the data, and then you read multiple articles and you get a really good picture of where it's going. I still think it's going to crash pretty big because, when you have situations where communities, it's hard for communities to afford to live in their own neighborhoods. That's a clear indication that, we're in a bubble. And anytime we have a bubble, guys, what happens? It pops. How much it pops, we're just going to have to see. And when it pops, I'm thinking early 2023, we're going to start seeing some big drops. And it's going to spook a lot of people, guys. It's not going to be pretty. But right now, it's like almost like the honeymoon period. We're going into the divorce pretty soon. Now, I want to just say, I'm going to finish this video. I want to say thank you guys so much for watching my videos, liking my videos, leaving comments. It's so awesome. It means so much to me, and I want to just thank you from the bottom of my heart. If you're new to my channel and you like what I have to say, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Thank you guys so much for watching. I love you guys, and I'll see you on the next video.